All right, now property, especially in Australia, can play an integral part of a diversified portfolio. And for the savvy investors out there, there are many entry points to access the market. So what are the most common and why? Well, to tell us all about that, we have Anthony Landahl from Equilibria Finance joining us here in the studio. Anthony, thanks very much
for
joining us. Look, let's start with a very basic question. At the cash rate, everyone says, yes, it's going to impact my mortgage. What else is it going to impact when it comes to your investment portfolio?
Yeah, what we're seeing with investors is that the cost to hold a property and the cost to fund a property has gone up. At the moment, we're seeing a lot of investors considering selling properties and sitting on the sidelines. So investor activity is down and investor property sales are actually up, being replaced by owner-occupiers essentially. So at the moment, we're seeing a lot of mum and dad investors reconsidering either a purchase or reconsidering whether they get into the market at all. The longer term savvy investor is, I guess, playing a more long-term game. They've been in the market a while. They're used to the fluctuations and some of the volatility and the cash flow management that comes with investing in property.
With this reports of this, there's a lot of stock in the market and maybe FOMO getting into investors' minds. Is this an opportunity to buy or just hang on a second? Let's wait till things settle down.
Yeah, I think behind Australia's housing, we all know there's the structural issue of supply and demand. And I think for investors, the fundamentals remain the same. A good quality asset is going to last time over time. And the fundamentals of that are going to be the same. So I think the savvy investors through that COVID time saw equity created. They drew some of that equity out to create some cash flow for future leverage. So there's quite a bit of investor activity from the longer term investor. I guess we're seeing a bit of a slowdown in those people maybe considering buying their first property. And we're also seeing some genuine cash flow considerations for investors. But for the longer term investor using leverage for their wealth creation with a long-term view, they're absolutely finding opportunities in some of those markets where the prices may have dropped, the prices might have come off, they might have got overvalued through that COVID time. And they're seeing opportunities in those areas with the right infrastructure, the rental yields, and the ongoing capital growth.
Yeah, so let's talk about financing. That's what we want to know from you, financing strategies. Lending activity has gone down in the recent PEXA research that we saw. What is the best way to finance now? And since coming to Australia, I've heard so much about negative gearing and all those different strategies. What do you think is the best in this circumstance now?
A lot of investors in Australia have just borrowed against their home traditionally to get started. Then they've used leverage and they've created wealth through essentially using equity borrowing, and essentially trying to borrow 100% of the value of the property to get the maximum tax benefit. That's still a well-founded strategy, and whilst we're seeing higher interest rates, a tax-effective strategy where you're managing your cash flow can still work. We're also getting good, strong rental yields from that perspective. So if you get your finance structure right around the leverage, some people are borrowing 100% of the property through using equity in an existing investment and gearing the new property. And that can be a very tax-effective gearing strategy. Some people have a positive gearing strategy where they want their property portfolio to be cash flow positive. So what's really important is get the strategy right, understand your cash flow, and understand your cost of funding. You've got your traditional funding with your banks, but then there's a lot of second tier and other access points these days to actually be able to get into the investment market. There's property trusts which allow people who may not have the equity in their home or the funds to access properties and portfolios that maybe they couldn't traditionally. There's peer-to-peer lending, there's private funding, there's project funding. So there's a lot of finance options that sit behind those broader strategies.
When you talk about trusts, you're talking about REITs.
REITs, listed, unlisted property trusts where people are able to access residential, commercial, industrial property. It might give them more liquidity with their portfolio, and it also might give them the ability to access property that they may not have been able to do through the traditional means of using equity in a property or saving for the deposit.
Should we be rethinking how banks are now interacting with their customers, in that there's more aversion to debt because they want, as Sally was pointing out, to pay back the initial principal rather than just having an interest-only account. So is that something that we need to consider? The banks themselves are no longer accepting what the strategies used to be before?
Yeah, look, I think the banks understand from an investment perspective the strategy around interest-only. Essentially, a bank will want to make sure that their customers are paying down their principal place of residence. But from an investment perspective, there's still lots of opportunities to take advantage of tax-effective borrowing strategies around interest only, around borrowing up to 90% of a property, around using the other 10 or 15% against your home. So it's definitely still able to access that interest only lending in the current landscape. The main thing they're looking at is more around the owner-occupier paying down their facilities.
Yeah, I mean, coming from outside, I find it fascinating the number of financing options in this country when it comes to property. Anthony Landahl, Equilibria Finance, thank you very much for joining us.
No worries at all.
All right, time for a short break here on AusBiz, and The Plot is coming back with more.